US core inflation rate month on month and year on year. The Bank of China, one of the officials came out. Things are still a concern there in terms of the property sector. We also today have quite a lot of data. We've got industrial production, retail sales, and the housing data, which comes out of China. So keep a good focus on that. Okay, so let's have a little bit more focus on the PBOC. And I think we had Bureau Director Wang Xing came out and basically said that with the reserve rate at 6.6% and the way the economy is not performing that well, they'll set for the PBOC to embark on more of a weaker monetary policy next year. Now, that could be lowering rates. The current rate in China is 3.1%, and that can certainly go lower. We know inflation, there's no inflation concerns in China, the deflation. So it's quite important though to try and stimulate the economy. The main concern that we have there is the way the property sector just hasn't looked good. And I think when you really look at the housing data, that to me is one of the big things, because that remains wholly negative. And I think that if that's going to continue, then it becomes more of an issue. When you do look at the housing price index for over 70 cities in China, it sits around about minus 5.8%. and has been trending down quite significantly all year. Now, if that doesn't turn around, then you've got knock-on effects there in terms of investments in the economy, and also demand for inputs. So when you look at that sector slowing down, that's going to have some adverse effect on Australia, which we really haven't seen yet, which is quite surprising. So a little bit of a concern there, but let's certainly have a look at it. Certainly see remember that data's coming out, so that'll be quite important. Also note that, remember, the real estate sector does contribute 25 to 30% of GDP. And when you look at the economy looking to edge out a 5% gain for this year, I think people are starting to question that. Now, that might have a little bit of an on-flow to the rest of the global market. Okay, let's have a look now. This week we do have some very important stuff out of the US. We've got the FOMC meeting, and we've also got all that industrial production, retail sales, capacity utilization also coming out of the States. Because if that data shows weak, now the market really wants to see a 25 basis point correction in the States. And if the data is not there, then we'll see. If it's softer, then I think the Fed will actually act. Last week we had the inflation data. That inflation data, although it showed a small uptick in the month on month, the general core rate was okay. So I think from an inflationary point of view, the Fed could move on interest rates by a certain amount, 0.25% is what the market's looking for. But I think the numbers this week will dictate that. And I think in looking at that, if we do get softer numbers, which is what we're expecting, then you could see interest rates move over there. It doesn't make sense not to. Remember, I think the key there is industrial production, retail sales, capacity utilization. They're all going to look a lot softer. That's the forecast. So if that's the case, then you will find that the Fed will move. Give everyone perhaps a little bit of an early Christmas present by way of a cheaper borrowing costs. But yeah, as I said, Wednesday is the data, Thursday is the decision. So keep pretty close to that, because I think that's quite important. Okay, next week, as we also got we've got the FMC, as we've mentioned. We've got personal income, spending, GDP growth, industrial production. So there's a plethora of data. In China, we've got all those numbers as well. So that's going to be key for Australia